Today is the 21st of July, 2009, and Federal Chairman Ben Bernanke spoke upon Congress today. First off, I'd like to mention that the Federal Reserve is a private-run organization. I know most people are familiar with that, but for those who are not, it is actually as Federal Express, as Mr. Gerald Celente would be mentioning. And I'm going to be going through a lot of the different notes in which was said today, and then just have a quick comment on each one. First off, he mentioned that it will take time for the stimulus package to actually work, and the pace of decline has slowed down significantly. I use a comparison, and I have for many videos, about a stimulus package like a pain medication. If someone was to have a slight pain, maybe a little bit of a headache, maybe a small sore back, or I don't know, something very minor, you would take a basic ibuprofen, Tylenol, Advil, whatever. And that would help to reduce the pain. But if you have a severe amount of pain, these medications are just, quite frankly, not going to work. And I'm doing the comparison because as the economic situation is going through a lot of pain, I see the stimulus package as that, like a painkiller, which is why we see the decline pace not as bad. And that's the same is true when you take this pain medication. If you have massive pain, and we're talking massive pain, and you take a massive painkiller, it's not going to take all of the pain away, but it is going to make the decline of it slower. So it's the same kind of deal. So I don't see how why he says it takes time to work other than an outrageous lie or something that I just don't get. Ben Bernanke is also urging banks to make loans to credit-worthy borrowers. And this is the problem that got us here in the first place. Whether interest rates are low or whether they are high, it's creating money that doesn't exist as far as interest is concerned, basically adding to the debt. So if a bank was to lend, say, $100,000 to some, well, I guess as they call it, a worthy borrower, and over the duration of the time they have this loan, maybe they pay back $12,000 in interest. Where does that $12,000 come from? It doesn't exist anywhere, so it comes to debt. And that's why our debt is going so high. And all of these millions and millions of people throughout North America, they are just adding to that situation, let alone when banks borrow money, they have to pay interest on it themselves. All of this interest just makes debt a lot higher. And whether the interest rates are low, well, that means more will be borrowed, but less interest. Higher interest rates would mean lower amount of money would be borrowed, and of course the debt would even be extremely high there also. Also on the what he said is that proper authority could have helped out Lehman Brothers situation last year. It's very interesting because I watched a video about a week or two ago where I don't know if it was Goldman Sachs or JP Morgan, but apparently Lehman Brothers and even other ones that they let fail, then apparently they're a big competition with them, so of course just let them fail. But oh no, we can't let AIG fail because of how much money they owe the big banks, who are Bank of America, Citigroup. They're not big banks. They're talking about the ones like the Goldman Sachs and the JP Morgans, because that's where a lot of the AIG money comes from. They talk about a lot of different companies who are too big to fail, and just like the stimulus and painkiller comparison, I guess, I'm going to do the same thing on a too big to fail. Say you take this smart little kid or a smart little student who's in school, who's very big as far as intelligence is concerned. Yet this child has been going through a lot of problems recently, and his academics are just not quite as good. Is the school going to say that this person is too big to fail and then just pass them anyway? Yeah, okay. Moving on. He said commercial real estate is under more pressure. And when I look at this, I look at what Gerald Celente has been saying for the last few months, And that is all of these commercial real estate buildings, when they are going under, who is going to be taking them? And he says nobody. So realistically, it's just a much lower percentage. So when these businesses went out of business before, a lot of times the average one would get filled in within maybe a few months, and over 90% would get filled in. Realistically now, a lot of them aren't going to get filled in. Maybe 80, 75%, 90% of these are just going to remain vacant. So when you have all of these vacant properties, the prices just have to go lower. So to think that there's going to be a housing or real estate bottom, to me, there's just no signs of it. And if you look at the signs say it's going to be going, the prices will be going a lot lower. Even if we have a lot of inflation, if inflation gets out of control, then this inflation rate for housing is going to be nowhere near the other inflationary periods. When asked about the housing market, Ben Bernanke did struggle a lot with the question. I was really focusing on tells from Ben Bernanke, and I could really see a lot of just distress and just discomfort when confronted with the question. Ben Bernanke is expecting the unemployment rate to peak in the year 2009, at the end of the year roughly at 10%, and 2010 and 2011 to remain weak. So I guess what he's trying to say is that on 10 and 11, unemployment rate might be between 8 and 9.5%. That sounds like where it's going, and quite frankly, to think that unemployment is actually going to top in this year, just like the housing situation, there is no signs of it, and if you do look for the signs would say it would be going higher. Now the next thing is Ron Paul. Excuse me, Ron Paul. I was really looking forward to seeing what he was going to have to say. Now the big thing is, I was watching it earlier on, and they were showing a few congressmen speaking, but there was no reply at the time, because at the start of the meeting, congressmen would be speaking for about 30 to 60 seconds, and then another one would be speaking. They went off to speak back to the newsroom, and then all of a sudden they were showing a picture or a video of Ron Paul speaking, but they wouldn't put the audio on. And Mark Haynes was mentioning how Ron Paul has been a thorn in the side of Ben Bernanke. And then, of course, they went to commercial break without even saying what he said, so I have no idea what he said. But after Ben Bernanke speaks, the congressmen get to speak again and ask a question for Ben Bernanke. So I waited for Ron Paul's question. He was first talking about the inflationary period. He was basically saying that I guess you have a different definition of inflation, as he talked about the increasing of the money supply, which is doubled, and how the immediately sends out false information for the stock market. And right off the bat, when I listened to Ben Bernanke, oh, you can see the intimidation factor in which that he had for Ron Paul, and greatly so, definitely, because Ron Paul seems to be one of the very few congressmen who is very aggressively trying to get things to work. He wants to have the Fed audited, and of course the powers that be do not want to have this happen. When Ben was asked about inflation, he said that inflation is the price consumers, which is very stable right now, and the M1 and M2 are not going up quickly. And he had a very difficult time answering this. And at the same time, the person who the speaker, I guess you could say, quickly got on and got another congressman to speak. So they really got through that very quickly, and Mr. Bernanke had a very hard time answering that particular question. So now I ask you, what percentage of what Ben Bernanke says is the truth, and what would happen if he came out and at least spoke the truth? For example, I'm going to go through the exact same things that I said, and what would happen if he said The stimulus package was created for the economy to have a lower pace right now. It was more of like a quick little fix, if you will. Let's just say that, of course, commercial real estate is under pressure and it's going to continue under pressure, as he mentioned stuff about that. He says, well, the unemployment rate should continue to steadily go higher because of the fiscal policies that are into play. The economy is not recovering and we are going to have massive downturn over the next few years. If he were to be saying that kind of stuff, what do you think would happen? I'll tell you what would happen. A mass panic would start immediately. We would see the stock market, as he was saying that, lose 200-300 points in a matter of just a few minutes. It would probably lose over 1,000 points for the day. There would be a bank run on the money, which is what they don't want to see. So when people say that there is an agenda, obviously truth is not part of their agenda